The global financial landscape is experiencing notable shifts. U.S. Treasury bonds, traditionally viewed as one of the world's safest assets, are facing new scrutiny from international investors. European investment funds and institutional investors are reassessing their exposure to U.S. assets. This represents a significant change from decades of practice, where U.S. debt was considered the gold standard for safe investments. Several factors are contributing to this shift: the substantial U.S. public deficit, ongoing trade policy debates, geopolitical tensions, and questions about central bank independence. Major institutional investors, including sovereign wealth funds and asset managers, are taking a more cautious approach. European leaders have indicated they may reduce holdings of U.S. Treasury bonds if economic and political uncertainty continues. U.S. officials have responded firmly, with Treasury Secretary Scott Bessent addressing these concerns directly. We've had record foreign investment in our Treasury auctions. This notion that Europeans would be selling U.S. assets came from a single analyst and was subsequently amplified. Despite political tensions, the U.S. bond market remains relatively stable. Treasury yields have risen, but not to levels that would indicate a crisis. However, investors are diversifying. Central banks worldwide are increasing their gold and silver reserves as alternative safe haven assets. The key question for financial analysts is not whether the United States will lose its economic leadership immediately, but rather how political factors might affect investor confidence over time. In financial markets, confidence is foundational. When it weakens, market adjustments follow. European investors currently hold trillions of dollars in U.S. Treasury bonds. Any significant reduction in these holdings would have structural implications for global capital flows and interest rates. For now, the market continues to function normally. International demand for U.S. assets remains strong, though investors are watching developments closely. The relationship between political decisions and market confidence is becoming increasingly important in global finance. This situation illustrates how interconnected modern financial systems have become, and how investor sentiment can shift when uncertainty increases, even in markets traditionally considered the safest in the world.